the world's biggest asset manager just made a move that could quietly reshape how trillions of dollars in stablecoins are backed. BlackRock isn't just dipping a toe into crypto infrastructure anymore. It's building an entire lane for it. Welcome back to Microfinance. Today we're breaking down BlackRock's newest tokenized fund launch, why it just added a brand new blockchain to its lineup. Welcome back to Microfinance. And what this really means for the future of stablecoins, institutional crypto, and the money sitting behind digital dollars. This isn't BlackRock's first move into tokenization. Back in March 2024, the firm rolled out its BUIdeal fund, a tokenized money market product that's since grown to manage more than $2.6 billion in assets. That success proved something important. Big institutional money is comfortable holding traditional, boring assets, cash and short-term government wrapped in blockchain technology. And with stablecoins exploding in size, the demand for high-quality reserve assets has never been higher.
On Monday, BlackRock launched two new products at once. The first is the BlackRock Daily Reinvestment Stablecoin Reserve Vehicle. The second brings tokenized on-chain shares of its existing Select Treasury-Based Liquidity Fund to investors directly on blockchain rails.
Here's the headline detail. For the first time, BlackRock is putting these fund shares on Solana. Ownership records will also live on Ethereum and on Tempo, a newer stablecoin-focused blockchain network. Investors access their holdings through approved digital wallets managed by transfer agent Securitize. This isn't a free-for-all. Every wallet must be whitelisted and linked to a verified identity, and the transfer agent can restrict, freeze, revoke, or reissue shares when needed. This is an institutional product too. The minimum initial investment is $3 million. So what's actually inside the fund? Nothing exotic. It's built entirely from cash, short-term U.S. Treasury securities, and overnight repurchase agreements backed by treasuries. BlackRock has been explicit that the fund holds zero cryptocurrency and stays fully compliant with the same SEC rule that governs traditional money market funds. The timing lines up with the Genius Act, the U.S. law governing how payment stablecoins must be backed.
BlackRock structured this fund specifically so it can qualify as an approved reserve asset, meaning stablecoin issuers could use it to back tokens already in circulation.
And BlackRock isn't walking this path alone. Morgan Stanley and Fidelity have both rolled out comparable stablecoin reserve products since the Genius Act passed. The race to become the go-to custodian of stablecoin backing is now officially a multi-firm competition among Wall Street's heaviest hitters.
Step back, and the picture is clear. Traditional finance and blockchain infrastructure are merging faster than most people realize. When the world's largest asset manager puts real, regulated fund shares onto public blockchains, it sends a signal to every institution still watching from the sidelines. For everyday investors, this might not change your portfolio tomorrow. But it matters because the plumbing behind stablecoins,
what actually backs the digital dollars flowing through crypto markets, is becoming more transparent, more regulated, and increasingly built by names. BlackRock's cash management leadership framed this as giving clients more choice in how they use money market solutions, whether they're operating in traditional markets or on-chain. In other words, same product, same protections, new rails. It's not without risk. BlackRock's own filing flags that future regulatory changes could affect whether stablecoin issuers can keep using this fund as reserve backing. On the technical side, blockchain outages or smart contract bugs could disrupt transactions in ways a bank transfer never would. Still, the trajectory looks obvious, or smart contract bugs. Tokenized treasuries and money market funds are one of the fastest growing corners of the entire crypto industry. And with the largest player in global asset management, now spreading across 3 separate blockchains, expect competitors to keep racing to catch up. BlackRock just proved that tokenization isn't a side experiment anymore. It's becoming core infrastructure for how stablecoins get backed and how institutional cash moves on-chain. Keep an eye on this space, because the line between traditional finance and crypto is getting thinner by the month.
If this breakdown helped you understand what's really happening behind the scenes of stablecoins, hit subscribe so you don't miss the next major money move.
And drop a comment telling us which blockchain you think wins the tokenization race.